Okay, so what is going on with the market right now? You could say Wall Street is basically a battlefield, and it's caught in this massive tug of war between two of the most powerful forces in finance. Pure, raw fear, and on the other side, some very calculated, contrarian greed.
And if you want to see just a snapshot of that panic, look at this number. In 1 week, just 1 week, Meta, Facebook's parent company, saw its market value just evaporate. We're talking $172 billion gone. And that is not just a bad week at the office, that's a huge symptom of a much, much bigger unease.
So what's really behind all this? I mean, the S&P 500 just logged its 5th straight week of declines. That's its worst run in months. It really makes you ask, what exactly is driving all this anxiety on Wall Street?
All right, to get what's happening, we have to really dissect the fear itself. It's not just one thing. It's more like a perfect storm of concerns that are all hitting the market at the exact same time.
And this fear, it really boils down to two major problems, and they are shaking investor confidence right to its core. One is this global storm that's been brewing, and the other, it's a brand new, kind of unsettling threat that's hitting the tech industry right here at home.
So let's start with the big picture, the macro storm. The U.S.-Israel war with Iran is now into its 5th week, and that's creating this massive geopolitical uncertainty. Of course, that instability is sending oil prices through the roof, which then fuels fears about inflation and what happens next. Consumer confidence just plummets. People are getting really nervous.
And listen, this isn't some abstract idea that only economists talk about. Just look at this. You can see the real-world impact right here. The national average for a gallon of gas has jumped a full dollar in just 1 month. That is a direct hit to your wallet, and it makes everyone anxious about what's coming next.
But the anxiety isn't just about conflicts in gas prices. Nope. There's this new, almost more sneaky threat popping up right in Silicon Valley. Tech companies are facing a totally new kind of legal fight. See, this isn't about content anymore. That was protected by Section 230. These new lawsuits are targeting the design of the apps, arguing that things like infinite scroll and those recommendation algorithms are intentionally addictive and harmful.
And if there's one thing investors absolutely hate, it's uncertainty. This is not a problem that's just going to go away. As this analyst from TD Cowen points out, this whole legal battle is probably going to drag on for years. And that creates what they call a stock overhang, basically a big cloud of doubt that could keep prices down for a long, long time.
Okay, but this is where the story completely flips, because for every person selling out of fear, there's someone else on the other side who sees a massive opportunity. So let's look at the other side of this coin, the contrarian argument. It's probably one of the most famous lines in all of investing, right? From Warren Buffett. And it perfectly captures the mindset of this small but really powerful group of investors who look at all this panic and they don't see a reason to sell. They see a massive for sale sign hanging over the entire market.
And right now, the person leading this charge is the billionaire investor Bill Ackman. He actually just went on social media to make this really bold case that, the market has totally, completely overreacted.
This quote, right here, it gets right to the heart of his whole argument. He's basically saying the panic has pushed down the prices of world-class, amazing companies to bargain basement levels, and that has created one of the best buying opportunities we've seen in a long time, but only for those who are brave enough to take it.
And this slide just lays it out perfectly, the two competing stories fighting for control. On the one hand, you've got the fear story. War, oil at over $112 a barrel, inflation, that new legal threat to tech. But on the other side, you've got the opportunity story. Valuations are extremely cheap, earnings forecasts are actually strong, huge stocks like Microsoft are at a decade-low price, and investor sentiment is so low that it's historically been a huge buy signal.
So how do you even navigate a market like this? Well, some investors argue that the best plays aren't in those big headline-grabbing stocks at all. They think the real opportunities are in the places Wall Street just tends to ignore.
And this brings us to the whole philosophy of the legendary investor Peter Lynch. He was famous for championing the idea of investing in what he called invisible companies. These are just solid businesses that completely fly under the radar of most major analysts, and because no one's watching them, you can find some incredible value.
So let's look at a real example. Here, we're comparing Apple, which is covered by 46 analysts, to a company called Trinity Industries, a railcar manufacturer. You know how many analysts cover them? 2. Just 2. And because of that lack of attention, Trinity trades at a single-digit PE multiple. That's about a fourth of Apple's, even though it's a consistently profitable company. I mean, that's the Peter Lynch philosophy in action, right there.
And you know what? There's actually data to back this idea up. Last year, a remarkable 59% of small-cap fund managers, these are the folks who specialize in these less covered companies, they actually beat their benchmarks. Now compare that to just 20% of all U.S. stock fund managers. The numbers kind of suggest there really is an edge in looking where other people aren't.
So the big question is, where do we go from here? With all these conflicting signals flying around, investors are just desperate for some new data, something that will tip the scales one way or the other.
And, well, this week is absolutely packed with it. On Tuesday, we're going to get a fresh read on consumer confidence. Wednesday brings the manufacturing index. And the week ends with the big one, the March jobs report on Friday. Every single one of these is going to be a key piece of the puzzle.
Which, of course, leaves us with the ultimate question. In a market that is being pulled so violently in opposite directions, between that gut instinct to just run for cover and the temptation to dive right in, which one is the right call? Well, only time is going to tell.